I refer to a lot is Benjamin Graham, and what worries me now is what he referred to as a period in 1929 and the early 30s as a lab experiment where normal intrinsic values and margins of safety broke down, or seemed to anyway. And I wonder how much you think that might happen now in the next few years, and how much you worry about that with the investments you're making.
Well, we generally believe you can just see anything in markets. I mean, just extraordinary what happens in markets over time. It gets sorted out over, eventually. But I mean, we have seen companies sell for tens of $billions that are worthless, and at times we have seen things sell for 20%. A number of things, not hard to find, perfectly decent people running them, sell for literally 20% or 25% of what they were worth. So we have seen and will continue to see everything. It's just the nature of markets. They produce wild things over time. And one of those wild things, and not to get carried away when other wild things happen, because the wild things create their own truth for a while, and you have to, that's the reason they're happening, and people are getting pleasant experiences and all that. You'll see everything if you're around markets for a reasonable period of time. We don't see any great cases of dramatic undervaluation by this market. So it isn't like we're seeing, because there's perhaps this speculative mania in a particular area of the market. We do not see that creating incredible undervaluation other places. What's happening there may lead to undervaluation, a few years from now, or it may not. I don't know that, but it isn't like you can find things that are worth double or thereabouts what you're paying, because frankly there's so much money sloshing around that if you found such a thing, it would be very likely corrected by some buyout types. I mean, we would love to find businesses that are selling for half of what they're intrinsically worth. We don't find that. We do find a lot of cases where we think the valuations on the high side are unbelievable. We have been in periods in the past where we felt almost everything was being given away too. So you'll get those extremes. Most of the time the market's in a position where there's a little of both, but every now and then it gets into a position where there's a lot of one or the other. And we would love it if we could find a lot of reasonable sized companies that were selling at what we thought were half of the intrinsic value. We're not finding them. Charlie?
Well, I do think that the present time is a very unusual period. It's hard to think of a time when residential real estate and common stocks and so on rose so rapidly in price, and there was so much easy money floating around. I mean, this is a very unusual period.
What's fascinating, and I'm sure you thought of it, is that you can now have a business, saw a few of them, earlier this year, we'll say, that might have been selling for $10 billion, where the business itself could not have borrowed probably $100 million in debt with an equity valuation of $10 billion. But the business itself would not, as a private business, would not have been able to borrow $100 million. But the owners of that business, because it's public, can borrow many billions of dollars on their little pieces of paper because they have this market valuation. If it's a private business, the company itself couldn't borrow 1/20th or so what the individuals could borrow. That's happened to a degree before, but this has probably been as extreme as anything that's happened, probably including the 20s. That doesn't mean there's a parallel to it, but it's been pretty extreme. Charlie?
I think it probably is the most extreme that has happened in modern capitalism. In my lifetime, I would say the 30s were it created the worst recession in the English-speaking world in 600 years. And it was very extreme. You could buy all you could eat in Omaha all through the 30s for a quarter from Henderson's cafeteria. And now we're seeing the other face of what capitalism can do. And this is almost as extreme as the 30s were, but in a different direction. It's zero unemployment, rampant speculation, et cetera, et cetera. It's an amazing period.
That does not make it easy to predict, however, the outcome.
No.
It says to us, though, certain things we want to stay away from. I mean, basically, it's precautionary to us. It does not spell opportunity, although there's no question that in the last year, the ability to monetize shareholder ignorance has never been exceeded, I think.